Hey everyone, what is going on? It is K2 Investing here. I want to come at you with a quick video on the different order types that are available to you on the Robinhood app. I'm going to go over the three most common, known as a market order, a limit order, and a stop order. All of these are very important to understand and to utilize when you are trading because anyone can just push a button, but it's really important to know exactly what you're doing as you're purchasing stocks because it can make a huge difference on your price points of your entries and your exits. So what we're going to do is, as an example, let's just go into Starbucks here. Now, when you hit trade on the bottom right, it's going to automatically default to a market order. A market order means that it's going to execute at whatever the current market price is. And as you can see, as just sitting here for a couple seconds, the market price is ever changing. It's not changing a whole lot right at this moment, but this could be a huge thing when it comes to people who trade penny stocks that could go up and down very quickly, and you could get in at a horrible price point that you weren't expecting. Because even just a second it takes to actually hit review, swipe to submit, and for it to fill, see now it's 75, 77, you could get in at a very different price than what you originally anticipated. So going back, the same thing works when you go to sell. It defaults to a market sell, and very same idea. It's going to sell at whatever that market price is currently at. So it could go up, it could go down. There's no guarantee exactly what price point it's going to fill at until it actually fills, and you can look back on your order and see where it's at. So again, guys, market orders are probably the most risky orders that you could use, and I personally don't use them very often. I only use them if I absolutely need to because it's only a couple steps to execute an order, where the next order option, which is known as a limit, takes a few more steps. So again, when you go into trade and you go to buy, if you up at the top right where you see it says shares, if you hit that option, you're going to see here under conditional orders that you can order as a limit. Now, what this means is it's the maximum price you'll buy Starbucks for. So if you do your research and you understand the pattern of Starbucks, say you know that it could eventually go down to $72. So let's go ahead and put 72 as our price point. Hit continue. Yeah, extended hours, continue. You can have it for just today or all the way through July 24th. Hit continue. And this is where you put in a number of shares that you would like. So as you can see, it does take a couple more steps to set a limit order, but it's also a lot safer, meaning that I know that when I hit review and I swipe to submit, that this order is going to execute at $72 or below, my best possible price point that I've done my research for, and I know that I am guaranteed to make some gains if I get in at that price. Good thing to note too is you don't have to have your app open or up for these to execute. They're just automatically going to happen. So if you work a Monday through Friday and you're unable to sit in front of your computer or your phone when the market is open, these are great for people like that who can't, they just don't have the time to. So you don't have to worry about it. It's just going to execute on its own when it happens. Now, same exact thing when you go to sell. Shares top right, limit order. Now, this is the minimum price you want to sell Starbucks for. So say, again, you did your research and you know that Starbucks has the ability to go above $80. So you want to lock in profits at 80. So we're going to set that limit price to 80. Same idea, continue, continue, continue. Again, a few extra steps as opposed to a market order. Put that one on there. And this means that it will only execute when the stock goes 80 or above. And same idea, you do not have to be sitting there waiting for it to happen, for it to execute. It can execute at any time, and it will notify you, at least for me. I mean, Robinhood sends me notifications anytime an order fills, and you're guaranteed those prices. And this, in my opinion, I use limit orders the most. I think it's the safest option, and I also believe that this is your best bet to really lock in those profits if you take the time to do your research. And what's also great about limit orders is I am one of those people who works during the day. So when I do my research, I can actually set these limit orders the day before. When the market is closed and I do my research and I see, oh, there's a possibility Starbucks is going to go down, I'm going to set that limit order and it will execute the next day if it hits that price point. So you can even do this a day before if you would like. Next order to really understand, and it's great for new beginning investors to really get a step above the rest, is doing a stop order. Now, a stop order is a way to guarantee that you are going to minimize your losses if for whatever reason the stock decides to go in a direction you aren't planning. So you can do all the research in the world, which is great, understand the patterns, have all your indicators set and ready to go. But just because something happened in the past doesn't mean it's going to happen again in the future. So in order to minimize our losses, what we can do is under the sell option, again, shares, we are going to go to a stop order. Now this means, again, we bought in at $72. Say we expect it to go to 80, but holy crap, the stock plummets for whatever reason. So we need to make sure that we're putting in that risk management. So say, for example, I'm willing to lose $5 stop. So when Starbucks hits $65, if it decides to sell off, it's going to automatically execute a sell. So it will minimize my losses. Because say the stock actually goes all the way down to 50 or something insane like that, you're going to lose so much more money, or have to sit there and hold a stock that you might not be wanting to hold the hopes that it will go back up. And now you just got money tied up in something that doesn't need to be tied up in. So this is a great way to make sure that you actually are putting in your risk management and you're minimizing those losses. So you can go back later, regather yourself, do a little more research, and jump right back in it again. Because at the end of the day, no matter who you are or how good you are at trading, you're going to make bad decisions and you're going to make bad trades. And a lot of times it's out of your hands. You can't control that, which is completely fine as long as you understand the importance of risk management. So I appreciate you watching this video. As you can see up here, my portfolio is doing pretty well. We're still in the grips of that corona pandemic, but overall my portfolio is down 24%. At its worst, it was down about 35%. So we are seeing a little bit of something. It'll be interesting in the future to see exactly where this goes. I have a lot of faith it's going to get back to where it was at one point. It's just a matter of when and how much time. But anyway, if you guys enjoyed this video, please hit that like button. And if you learned anything, hit that like button. If you want to see more future videos like this, please hit that subscribe button. If you have any requests, if there's anything you're wondering of how to do, please put it down in the comments and I'll do my best to make a video on it. But I really appreciate you guys taking the time to check this out. And as always, I hope you stay green, you stay classy, and you make your moves with kinetic knowledge. Take it easy.